Guten Morgen. Boo, how are you? Good morning. FXStreet. Yeah, trade non-farm payrolls live month 208. Is that correct? 208? That is more than 17 and a half years of me doing this webinar month over month over month over month. 208 months, dude. Holy smokes, eh? Oh, for sure. That's pretty amazing. Thank you, FXStreet, for being wonderful, kind-hearted, naturally talented, hardworking people that care. We have the best moderator in the whole world. Nobody moderates better than our moderator. There's nothing moderate about our moderator. We have an extreme moderator. So anyways, thank you. 208, huh? 208. Yeah, good morning. Lots of familiar faces and names. My name is Wayne McDonell. Been trading Forex for, just about 20 years professionally. I started with technical analysis. Then when I got my Series 3, I had to study fundamentals and fell in love with fundamentals. Then not long ago, I decided to be an inspiration to my children as they started bringing homework home from school. And I said, you know what? This is a great opportunity for me to go to school and show them what it takes to be an A student. So I signed up and went to Harvard for 5 years and got 2 degrees. I have a bachelor's degree in macroeconomics. Then I got a master's degree in financial management. And I fell in love with education. So then I went to Harvard Business School and studied alternative investing. More postgraduate work at MIT, where I studied cryptocurrencies with Gary Gensler. He was my professor. Yeah, the guy who runs the SEC was my professor at MIT. When the class was over, then he took over the SEC. Yeah. And then I studied algorithmic trading at Oxford. Legit. Oh my God. That was an amazing experience. So I know a few things. I have some experience. If you don't know me before that, I was a businessman. I was a venture capitalist. Before that, I was a coach to high-tech startup CEOs. I worked with George Soros on a nonprofit organization. I worked at NASA, Cisco, and Apple. Yeah, those ones. And kids, NASA was the first space company. Is that like SpaceX? Yeah, I guess it was kind of like SpaceX. Yeah. But anyways, cool. So that's me. How are you? What would you like to learn today? Technical analysis, fundamental analysis, trader psychology. It's all good. I thought what we would do is jump into maybe the Fed. Pull some numbers out of the Fed. Nicholas, yeah, everything. Yeah, I like that. Actually, that's a pretty good segue. I guess I need to share some resources with you. So I've been doing this a long time, and people just like yourself have asked for help. So I got to bring up a few things. Okay. Mistyped that. So you'll see in my my chat handle, I'm associated with tradersway.com. I do daily webinars with them. Cool, right? I believe them to be a quality broker, trustworthy, ethical. I don't believe they trade against you like most brokers. It's clean, it's organized, great customer service. Give them a try. That's all. I recommend them. Go try them. Do your own due diligence. But I'll push you in the right direction. I started a new service that will blow you away. How many people are ready to be blown away today? This is a free service. I've spent a lot of money. A lot, actually. Sorry, I did brain fart. I'm like, yeah, actually a lot. Look, where's my mouse? You got to try this. You got to try this out. Tradeplans.ai. I'll let me speak for myself. Hey, welcome to Tradeplans.ai, where you can get feedback on your trading idea in less than 3 seconds. You fill out the form, you hit submit, and our trade plans will already be in your email account. In fact, when you open it up, you will see that there's a trade plan for daily, for weekly, and monthly. And again, we can do this in less than 3 seconds. Now, how is that even possible? Well, of course, I'm utilizing artificial intelligence. So my name is Wayne McDonell. I've been trading for over 20 years, and I've been teaching artificial intelligence on how to trade. So when you submit a trade plan, we have thousands of candlestick data points in which we can analyze using dozens of algorithms and help you put together trade plans. You can take what you thought with what the artificial intelligence is thinking, and you can compare and contrast. But here's the cool thing. We also track the trade over time so that the machine is learning from your wins and your successes, or in your failures, or its wins and its failures. And the more trade plans you upload and the more trade plans others upload, the better the feedback gets. So give it a try. Fill out the form, post a trade plan, and check your email. There's already 3 different types of trade plans for you to compare and contrast with your own. Try it out. It's awesome. It is awesome. How do you reach me privately? Wayne at FXBootcamp.com. So please try this. I've spent and I'm spending. So like, just host the AI on Amazon Web Services, because when you post a plan, it has to think. And AWS charges me by how much it thinks. And we're already at the point where it's costing me almost $100 a day just in the processing power of analyzing your trade plan and generating something for you. Then I spend hundreds of dollars on just sending you the email. I also have to pay a lot of money for writing the email, not just the trade plans, but writing the email. All of this is done with artificial intelligence. And of course, the development work. And I have to buy all the data and all the candlestick stuff. So I am dropping like a boatload of money on this. And I'm asking you to try it for free. Like, it's legit. Like, this is not a simpleton little project. You got to try it. It will blow you away, actually. You will be amazed. Okay? Yeah. Cool. All right, so try it out. You will be amazed. Okay, let's go to FX Street. I believe we're what? We're expecting what, 200? 200? Yeah, 200. Okay. Okay, 200. Is that good? Is that bad? Well, it's not recessionary, is it? We had a red hot ADP. Okay. J-Man says, I'd like to see Bitcoin in numbers. I forgot to even mention that. Something new for people that are using Tradeplans.ai. We do stocks now like the S&P 500. We only have Apple and McDonald's right now because they didn't know what candlestick data to put in there. So the next version will have more or less. We have all the Forex pairs, obviously, and you can build your own pair. Euro, right? Now it's all the Euro pairs. So if you're trading Euro, Israeli shekel, we got your back, dog. And crypto, shut the back door. Yeah, Ethereum, Bitcoin, Ripple. Okay, cool. Cool. Like, dude, we have all the candlestick data for the 15-minute, hour, and daily, and we're analyzing everything in real time. And watching hundreds of trades, too, in real time. All right. So anyways, cool, right? Right? All right. So 2 hundo and a red hot ADP. So that would say maybe a bit better than ADP. Why don't we take a look at ISM? Let's do employment subcomponent for services. I think that's more important than manufacturing. And we had there, but I want to show them context. Okay, so we're looking at ISM services, the United States of America, employment subcomponent. Okay, 50.7, but a month earlier, it was 50.1. So down. Down. It's growing, but slowing down, and it's only been growing 2 months. Okay, yeah. Now compare that to the manufacturing industry. 44 was 48. That means the manufacturing industry is already falling. It's not growing, it's decreasing. You could explain it like this. It's not quite right, but you can explain it like this. The manufacturing industry in the United States is already recessionary. I guess already it insinuates that we're going to be in recession. How about the manufacturing industry is in recession? But not the service sector. And of course, service sector is 70% of the industry. Manufacturing's tiny because the other 30% would also include the government. Okay, manufacturing, JP, James Paul, says a manufacturer's 18. That sounds about right. Thank you for that. But prices are still going up. Okay. Yeah, prices are still going up, yo. So what do you think about that? Inventories are falling, prices are rising. Yep. Okay. Backlog of orders are actually increasing. Yeah. This looks red hot, man. So if you work in a factory, things are probably not good. So you decide to move out of Cleveland, Ohio, and become an artificial intelligence developer at Apple Computers in Cupertino. So you move to California, get a $450,000 a year job, and find out that you're dead broke and you can't afford to live in the Bay Area, where there's crime, pollution, traffic, your house is tiny, your house is poorly built, you pay 80% of your income just to live in the house. Yeah. Hey. Yeah. Welcome to America. So anyways, interesting, huh? Okay. Let's do you want to look at the unemployment rate? Yeah, why not? So this is expected to stay the same. Okay, let's zoom in. Okay. Yeah, I'll be in Cuba in 2 weeks. Yeah. Once again, I'll be meeting with the former head of foreign exchange for the government of Cuba. Yeah. I'll also be meeting with senior executives of Cohiba. That's how the Wayne do. Yeah. Anyway, so it'll be nice to be back on the island. Okay, so anyways, what do you think? Dramatic changes going on here? No, we've been at this 3.6 for a while, huh? And then even before the crisis, what? Let's go back. Right? 3.9, 3.8, 3.7, 3.8, 3.8, 3.7, 3.6, 3.7, 3.7, 3.6, 3.5. Oops, didn't mean to do that. Hang on. Okay, and then we go now. So again, see average, and then where were you now? 3.5, 3.4, 3.6, 3.4, 3.7, 3.6. So we're just cruising along back to where we were post-COVID. So do you think there's going to be a radical change today? No. Okay, Rajani says, hey, what about COT data? Well, you have to go to the Commodities Futures Trading Commission. I do look at this every week, this data. Comes out every Friday afternoon, so at the close. So you go to the Commitment of Traders report. You want the one that has financial data in it. You don't want futures and options, just futures only. And there it is. I'll give you a link for that. So what you want to do is you want to look at institutional positioning. So you have to do some calculations. And you have to do the total number of contracts. Okay. Total minus hedgers. Okay. And you get a number. Okay, that's cool. So then what you have is their institutional. I know I misspelled that, sorry. Institutional investors plus retail. So you gotta like retail, okay. So then, right, what you gotta do is then say, well, there's that leftover. So then you go back and you do institutional minus the retailers. And there's a number. Well, the thing is, there isn't actually retail. So you look at all the reported institutional positionings, and you've taken out all the hedgers, and there's still a number left over. Because you have total. So total minus all the hedgers and all the institutional speculators, there's still contracts traded through the exchange. And that number represents unreportable, aka small positions in the market that are not hedgers and not institutional. That leftover, that remainder, is retail trading. So from this, you can derive where hedge funds, right, large institutional speculators, they're not hedgers. They're in the market to make money, so they're speculators. So you get this down where you got all the institutional speculators, you get rid of the hedgers and all that, and you get from this, you can then derive retail. But you have to do the calculations. And so now you can figure out retail positioning for every currency pair. So now you got to track currency pair and then compare and contrast. So you can like euro, versus yen versus British pound, and then you do the comparative analysis amongst them. Okay? So Rajani, you do that every week. And you keep track of it, how it changes over time. And then you should plot peaks and valleys. Okay, I do it every week. It's easy. Okay, so of course, I just automate the process. So this is another company that I own. I know, I'm an entrepreneur, what can I say? So, check it out. So like I log in. I go to my Pro account. This takes me to the Google Cloud. So I log into the Google Cloud with the appropriate Gmail account. Okay, now we're logging in and doing calculations. This is not a website. We're in a live database. Okay, it's doing calculations. Boop, boop, boop. Okay, cool. Daily evaluation, the market right now is mixed, so we don't have a trade in the moment. Bitcoin is flat, euro dollar is flat, S&P 500 is flat. Although, did you see Amazon up 8 or 9% today? Amazing. Gold is flat, oil slightly up. We're at 82 bucks, and the yield on the 10-year T-note flat. Looking at the scatter plot, there's no real opportunity before non-farm payrolls. But what I want to get to is here's the COT report, Rajani. So this is what Quantbox does with all that table data. We import it. Obviously, we have a direct connection into the CFTC. And we organize it this way, bullish to bearish. And then here's all the contracts and changes in contracts. So you can sort these. Right? So let's say the biggest change long, let me do the calculations. Okay? So CAD had 9,000 contracts go long last week. Gold lost 15,500 bulls. Nice to know the facts, right? Less bulls. Now, the other thing that we can do, this is for euro dollar, but we can swap this out, and I'll show you what, again, a live database looks like. So what do you want to do? Let's do something, I guess we'll just do pound dollar or something, right? Pound dollar. Easy peasy, easy enough. Let's reload the data. All right, so the green line shows the pound. This is the number of bulls that are long the pound. Okay, this is pound dollar, so the red line is the number of bulls long the US dollar. Okay, and and then this red line down here is the value of the pound dollar. This is the actual pound dollar. And here we are, these bars are showing whether the bias is bullish or bearish. And right now, because of institutional positioning, there's actually a slight bias towards bullishness on pound dollar. Not on quantitative analysis of the two economies, but just in institutional positioning. Cool. But you're like, okay, that's cool, but that's hard to read. There's a lot of thought there. Can you make it easier for me? Well, let's see if I can do something like that. Okay. This is on the right. Let me expand this so you can see it. On the right is institutional positioning, and on the left is retail. Those are the retail positions that we get from the calculation provided by the CFTC. Okay. What do you think? Lots of wonderful, pretty colors, right? I'll give you a little hint of something that we do. A couple of things, and then we'll move on. Quantbox will show you projections out to 2025. Still, it's doing the calculations. Boop, 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 boop. Okay, there we go. So obviously these are not just images, right? We can adjust all these things. That's right. Cool, right? All right, so anyways, these are forecasts for inflation and interest rates going into the future, and then comparing and contrasting all the major central banks around the world to give you current and future biases based on facts. So like, I'll show you, should we do, I guess, dollar. Cool. This is the Fed funds rate going out to 2025. Where do we get this information? Directly from the central banks. Directly from the central banks. This is the future going out to the end of next year. I'll remind you, it's summer 2023. These projections are going all the way out to the end of 2024. Where do we get all this information? Is it guesswork? Is it speculation? Is it some, oh, it's my proprietary algorithm? No, we get this data directly from the central banks themselves. Since you don't know where to look for it, and since you don't know how to keep it, we'll just automate everything for you. Isn't that nice? Oh, look, there's the future for the US dollar against different currency pairs. What do you think of this? Okay, the blue line is the 20-year average. The red line is the 5-year average. So in July, okay, euro dollar down. Look, euro dollar dropped. Okay, July, pound dollar down. Look, pound dollar dropped. Okay. Okay, look, USD yen, choppy, slightly down, ready for a rally. Well, that's kind of what's going on now. Aussie dollar, July, down. Look, July fell. Look, Kiwi dollar, July down. Look, Kiwi dollar fell. Look at this, July, over the 20-year average and the 5-year average, US dollar CAD tends to go up. Look, it went up. Oh my God. And imagine all the retail traders that randomly just throw trades together. I think I'll buy it today. Oh my God, huh? Okay. Crazy, savage data. Yeah. Yeah. Well, there you go. Quantbox.co. If you're not amazed, you're on a different planet. Okay, anywho, do we need to start with the Japanese government bonds today? No. I was going to do some PPI work. Why don't I bring that? Let's go back. Not this one. Nope. I wanted to go to maybe this one. No, not ISM. Yeah, let's go here. I want to do some PPI. Archie wants to know the future, but he doesn't want to pay for it. Hey, why don't you just go to quantbox.co, put a credit card in, and get the information you seek? Do you know what the trial cost? $8. I had a chart on my phone I wanted to show you, or for me to pull up, and I don't think I have it anymore. What was it? I think it was, Fed debt payments. I think we'll get there. Is this going to break it down? I thought this would break it down. Will I? Yeah, Archie. Yeah, for sure. Yeah. Cool. Yeah. Yeah. Has everyone read the report I wrote detailing exactly how to create the model for non-farm payrolls and then the 2 or 3 trading strategies that I give? You've already done your research, right? I believe it's on the sign-up page at FX Street. I'm assuming you've done it already, that I don't have to cover the basics. Yeah, I don't know where they post this live stream. You'd think it'd be on the homepage, but I'm not sure. I don't see it. That's... Is it under education? No. There I am. So if there's a page, I believe it's on this page. All right, how to prepare for and trade the employment situation report. So I've already told you how to model it, and I've already taught you how to trade it. 2 different trading strategies, and then advice. Okay? So, yeah. Oh, thank you. That's right, Greg. They have them on eBay. You can get a used one, right? Okay. You guys have only heard of this now? I've been doing just this one webinar at FX Street for 17 and a half years. Where have you been? Okay. That's so funny. Anyways, where do I want to be? Yeah, I want to be here. I just wanted to look at different forms of inflation here by industry, plastics, final demand, chemical, truck. Dude, come on, man. I just want everything. Hardware, manufacturing, air transportation. It's so funny. It's such a Fed thing, right? They'll give you every detail you want except just like the most basic, hey, what's the inflation level? What? Anyways, PPI. But what I was trying to show you is, we can do the all commodities, right? Yeah, I got it over there. It's just a compromise that I'm trying to do to get the screen to fit properly. So anyways, let me zoom in. And to here. And you can see we peaked out a year ago. And inflation on the PPI commodity side has been coming down really nice. You try to join Quantbox, but you don't know how. All right, well, let's try to do it together. Quantbox.co. And you, oh, right, and you click the button. Cool. Seems pretty straightforward. You're probably on a different website, huh? Yeah, that's what you just realized. All right, I'll give you the link again. It's cool. Yeah. Yeah, you have to register and pay for it. Yeah, it costs me money. Can you imagine how much it costs me to run this show? Yeah, you got to run. This is just one business. Dude, look how beautiful this is. It's insanity. I didn't even show you the best parts. It's insane what we do. Yeah. Anyways, the amount of data and the beauty of it is just total insanity. It's so beautiful. You know, it's kind of like, let's say you're a kid and your dad said, this is an important day. You finally got your driver's license, and I'm proud of you. Your father puts his arm around you. Your mom and I have been saving money, and we've decided to buy you this Ferrari. And you're like, Ferrari? You bought me a Ferrari? You're like, here's the keys, off you go. You're like, oh my God, that's insane. Yeah. Yeah, that's what Quantbox is like. All right, so let's get out of this. I don't want to do these. Let's start with commodities. Let's do S&P. Okay. So this is the next trade plan. There was already one at the top. Okay. And now we have the lower low, lower high established. And last night we were here, so my trade plan was to have it come up and somewhere around here, sell it. Somewhere around 45.25. That seems to have worked. And it's coming down. Yep. Cool. That would be indicative of risk off. And obviously will be directly impacted by the headline number today. I think a good number will be bad, and a bad number will be good. We call that trader psychology. Okay. What is this indicator? I have more than one indicator, my friend. So what indicator are you talking about? All right. So anyways, like I'm using Fibonacci, but I don't actually care about it. So I often use multiple tools because you guys use different indicators. You use different strategies. I think almost everything are different ways of getting to the same information. So I don't really care what the tool is. Ross, RB. Ross in the house. What's going on, my friend? Why do you have so many indicators? Okay, I got this. I get this all the time. All right, so Wayne's an idiot because he has too many indicators. All right, so let's clean this up then. I am bearish. Is that still too many? Like, for example, I find this important information because this was my projected high for the month of July. Okay, this was my best selling price, 4,599 for the month of July. So should I remove this information? Or should I leave it there as a reminder? And if you sold here, you would sell here. I mean, it's just so plainly obvious. It's gross negligence if you ignore it. So, but to Nimish, who says, why do I have so many indicators? Should I just get rid of that information? Yeah, I already know it, I suppose. So we'll kill that. I don't need it, but I find it terribly useful. Yeah, that's the right one. All right, so I'll kill it. All right, so now what? Well, my swing trade plan for the week was sell at this price, exit in the green zone. So we're done with that. So I don't want to kill it because I have next week's trade plan. So let me at least adjust it for Nimish. Okay. And I'm going to get this down to just one this week, next week. So it's a little cleaner for him. All right. So this week is done. And so, you know what? Maybe I can even clean this up a little bit even further. I don't know if I've ever actually done this. Let's go into 0. Will it still print next week? Yeah, okay, good. All right, so my trade plan for next week, Nimish, is this. Okay? Now, I can clean this up further because Nimish is still like, but Wayne, there's so many lines here, it could do anything. Well, if you don't know technical analysis, that's true. But let me further clean this. So I'm going to do this. I'm going to get rid of it completely, delete, and then I'm going to re-switch this into weekly mode from daily, because those are my day trading plans. I'll go to my weekly. I only want next week, and I am a bear. Okay, great. So I dropped this in there, and I think it'll, all right. So there we go, Nimish. So now I only have some moving averages, and I have my trade plan for next week. How's that? Is that better? Hey, Gould. Have you done your research, Gould? Nimish is clear. Thank you. Way cleaner. Awesome. See, I have a lot of information on my charts, but I only look at what I need to see. But don't you think it would be relevant if this was your projected high for the entire month of July and you were expecting a pullback? Like, why would you not remind yourself the importance? But you're right, I don't need it, but like, it doesn't bother me. I don't need clean. I need easy. But you have to understand though, Nimish, too, and this might be the difference here. I don't look at my indicators for information on what to do. Before I opened this chart, I already knew what I wanted to do. So that's a big distinction. I go to my charts with a strategy already in mind. Before I look at a moving average or an oscillator or linear regression and standard deviations, and I do all these calculations, and a lot of them I just do in my mind. I could do these things. Cool. But yeah, but could I trade this without even the moving averages? Yeah, I can dumb this down further. Let's kill all this. Let's get naked. You want to get naked? How many people here want to get naked with me? Let's get an 8 Come on, let's get an 8 Oh yeah, now we're going. Okay, what do I need? Here's a naked chart. I need two things if I'm going to trade technically. Me personally, I don't know about you or your mama or your YouTube guru. Okay? Your YouTube guru with they have fancy cars and they want to fly on a jet plane one day. Okay? I don't have a jet. I have a family. I take care of my wife and my children. I'm a provider. I don't have delusional dreams of being on a yacht with girls in bikinis and drinking champagne. I'm an adult. Do I have a fancy car to impress you? Yeah, actually I have a very fancy car and it's very rare, but it doesn't make me a success. I am wearing a gold watch by randomness. Yeah. Cool. So what do I need to be a success? Oh yeah, I don't have a Lamborghini though, but I do have 2 Harvard degrees that cost the same as a Lamborghini. Yeah, I'm an adult. Cool. So what does an adult need? Okay. What does an adult need? By the way, does your YouTube guru, has he ever run a company of 3,000 people? Has he ever traded $1 billion in a month? Yeah. Fire your YouTube guru and get the truth. Anyways, I need price action. And I need pivot points. This is me. That's it. I don't know about anybody else. Now, all the other layers to the onion are nice to have. But I need price action and I need pivot points. Now, you'll see like the price action and the pivot point says the same thing. I know, I understand the math. But does price action tell you a target? No, not necessarily. Sometimes yes, but not necessarily no. So I like to combine forces and say, if I were to sell there, my target's going to be here. Oh, snap, that's exactly what the pivot says. So I'm already done my trade plan for next week. So what's next? Well, I like to combine, okay, that's all I need for technical analysis. That's it. Nimish wants clean charts. That's all I need. Now, I could put 1,000 other things on top of there that are helpful. I don't get confused. I don't get all blurred. What does the MACD tell me? I can, by the way, if you ask me to, I could draw the MACD for you by hand. I can do all the calculations. I can do the calculations for linear regression and standard deviation. Right? Okay, y equals mx plus b. Okay, first thing you have to do is calculate the mean. Mean price, 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 right? This price plus this price divided by 2, plus the next one divided by 3, plus the next one divided by 4, plus the next one divided by 5, and you get an average. So then you get the average price, but then you got to look at the slope of the mean. Whoa, because it keeps changing as it averages. Averages. Great. And then you get something like that. Cool. But then M isn't the mean. What you want is the slope of the mean because you're trying to project the future. So you have to do the rise over the run. You do that, calculate. Oh, look, it's a negative integer. So it must be bearish. Great. Now let's calculate the variance. Okay, when that's the mean, how far does it revert from the mean before it comes back to the mean? How far does it go from there? How far does it go there before it comes back? Where's the highest highs? Where's the lowest lows compared to the average? So now you have the variance. Great. So now take the square root of the variance and create the standard deviation. Sweet. Okay. And now you want to do, right, not just standard deviation, but linear projections. So you're going to do calculations based on the M, because remember, this is just simple basic calculus and statistical analysis. So you already know the intercept and the y and x axes, and then you project this out, and now you have an idea for the future. So I can quickly say, bro, it's a downtrend, sell the lower high. Okay? So does your YouTube guru know how to do that? No. Anyways, cool. So it's coming out in a few minutes. So I very quickly looked at a few different things. I showed you very quickly. Okay? I showed you a few things quickly. You need to be doing your own research, whether you use Quantbox, great. But you can do everything for free. Okay? And so when I showed you the Fed stuff, you can do all your calculations really quickly. Or yourself. Where did it go? Is it on this page? Okay, you can do your own calculations on the CFTC so you understand institutional positioning. But the Fed, right? The Fed gives you all this information for free too. Like, let's take a look. Weekly jobless claims, weekly claims. Let's just do claims. Okay. Okay, look at all this data that you can just pull up at the Fed. Let's zoom in to our current. Okay. Is there a radical increase in the number of people looking for jobs? No. Okay, so we did some quick analysis. We looked at ISM services employment subcomponent. It's doing all right. Weekly jobless claims doing all right. Can we hit the 200? Yeah. Yeah, we could hit 200. We could hit 250. Now, here's the thing. Good news is bad news, because then the Fed will have to continue raising. So we can look at what the market is doing about this in a bit, but let's get the number out. But I just want to thank you for being here. Thank you for being part of FX Street, a wonderful community and source of resources and information. Stop watching YouTube gurus and talk to professionals. FX Street is your source of professionalism in the Forex industry. So it's nice to have you here. Thank you for being here, and thank you for your awesome questions, and I'll do my best to serve. I am a humble servant. Please post the number when you got it, and while you wait, click the thumbs up button. RV, $1.87, it's low. That's probably going to be good news. Oh my God, is that right? What about revisions? Do we have revisions? That's probably good news. Snap. Oh, God. Yeah, snap. That's interesting. It's look at the revisions, though. Look at the revisions. Look at the revisions. Come on, look at the revisions. Because that might be a bad number, but meaning it'll be revised back up next month. Where can you follow me? Actually, after this event, I'm hanging out in the premium members section of FX Street on their Discord channel. So that's FX Street Premium, but you got to be a cool kid. We don't let posers in. You got to be a cool kid. You got to be serious serious enough to pay money. It's so cheap, it's unbelievable. It's so cheap. If you're not a premium member of FX Street, then, well, good luck to you. Okay? But anywho, yeah, that's a low number. That's a low number. Not seeing any revisions, huh? Well, pay attention. We got to get that number if you can. But wowzer. Let's actually pull that up. Let's go to the Bureau of Labor Statistics in the United States. We don't want CPI. Let's go get it. Let's go get it. NFP. Here's the actual number. I'll get it to you. Okay. You get it. You got it. You know it's good. My rhymes are tight. You wish you could. Okay, let's go PDF on them. Pachow. Okay, noise. All right. Okay, still a pretty good number, but lower than expected. But remember, I think the revisions, you'll see. Okay, we got the revision there. Foxy says what? What was last month wasn't 209, was it? Maybe it was. Yeah. So anyways, let's get to it and we'll get the number here. Unemployment rate at 3.5. Okay, we know that's on trend, but that's even yeah, that's low though, huh? The unemployment rate changed from 3.4 to 3.7 since March. Okay, fine. Is that what it is? No. I was going to say, we didn't do the Challenger Christmas in gray. Challenger Christmas in gray. Let's get that number. La la, me, la la la, ma. Where's the number? They keep changing the names of their reports, and I end up having a hard time to find the basic information that used to make them popular. There we go. That's what we want. All right. Yeah, so even job cuts are down. Wait. Year to date, they're up. Let's get the data. All right. So this is companies doing layoffs. And layoffs are way down. So that's amazing that we had a low NFP. It's almost wrong. You'd almost think that it's wrong and that they got to revise it up next month. Okay. Andela wants to know what the commission on the DAX is at Trader's Way. Why don't you go to the website and look, or contact support? Yeah. You got it, dog. You can figure it out. All right. So anyways, layoffs, decreasing. Yeah, long-term unemployment. Okay. Yeah. Okay. Are they always? Yes. The reason for it is they just told you, okay, what's the date today? Does anybody know? My watch doesn't have a current date. It says the 2nd. Is it the 2nd or the 3rd? It's a 4th. Yeah, see, I don't, I can't see the date on these watches anymore, so I don't even keep that. All right, so it's a 4th. Okay, so in the last 4 days, okay, the Bureau of Labor Statistics did all the calculations for the month of July. They surveyed, so they called a bunch of people, then did some math to project the numbers for a 350 million person economy. Okay, how many people did they call in the last 4 days? Thank you, Danny. Okay, how many did they call in 4 days to get a data set, a data sample? Remember, the government workers. They do what? 1 call an hour and then take a break? Okay. All right, so it's a low number. And with this small sample size, they do some calculations and they come up with a number based on the calculations of a tiny little model to project a representation of the entire economy. Is it possible that their small sample size and the fuzzy logic of their math is perhaps not accurate? So the revision is, what if they continued the work, continued the survey, and got a big sample size, thousands. Okay. Now, here's the work. Let me show you how they do this. Okay. There's an establishment survey. This is businesses. And then when you go, okay. The first one is the household survey. Literally, they sample residential homes. They knock on your front door and they ask astute questions like, do you have a job? And you say, well, I have 3 jobs. I wash dishes at the hot dog joint. I work at a gas station, and I babysit my cousin's baby. The government worker looks at you. Is that a yes? You're like, well, I have a PhD in astrophysics, but the economy's so bad, there's no jobs over there. So, yeah, I babysit my cousin's kid. I work at a hot dog joint, and I pump gas. The government worker's standing there going, should I put yes? You have a job? Yeah, I have a job. I have crappy jobs, low-paying jobs. Okay, good. So yes. Done. Good deal. Asking all the tough questions. But yeah, that person might be underemployed. They might have 3 jobs, whatever. But that's the question. How many people in this house have a job? Okay. Then over here, completely different math, different survey. Now they're going to businesses and they're like, let us look at your payroll stubs. So the person that is employed up here, maybe we get some information about part-time versus full-time, underemployed versus not underemployed. Here we're counting like numbers of payroll stubs. So you would get 3 numbers. Well, I guess you wouldn't get unless it's a professional babysitting job with a payroll stub, right? This is where someone could be counted 2 or 3 times, where up here they're only counted once. Okay? And so they gather all this information, and let me tell you, they don't call everybody in the United States. They don't call everybody. So they call a few people. Even if it's over a month, it's thousands, not hundreds of thousands. And they do some math, some statistical analysis, and then they spit out a number. And so after doing the work for a month and doing many more samples, they might have to revise the number by as much as 50%. I've seen it where they're like, we thought it was 200. We were wrong. It's 300. We now think it's 300. You're like, whoa, what? Or we thought it was 300, but we now think it's 200. You're like, whoa, dude, what? 50% round error? Yeah, well, close enough for government work, right? But the revised number is a better number. But let's talk about the psychological aspect of what this means. Okay, so it came out lower than expected, which is good news because the market participants are going to feel that the Fed will not need to raise interest rates in September because the economy is already slowing down. Okay, the rate of adding jobs is slowing down. The pressure on wages will be slowing down and diminished. So the wage price spiral, right, will be diminished. So everyone's like, oh, that's terrible news. That's great. Yeah. And so your Nazi's probably going to rally today. Yeah, boy. Because the Fed doesn't need to do much more. So the bad news is good. Trader psychology, behavioral finance. You got to know your behavioral finance. Okay? Yeah, it's interesting, huh? So you're like, well, what about a projection here on the stock market? So you could do insert biased pivots. Let's do a day trade, bullish for today and tomorrow. Midpoint target. Yep. Boom. Bada bing, bada boom. So today's trade plan is buy in the green zone. By the way, you could have done this yesterday and it would have told you the same numbers. And our bullish aggressive profit zone is 45.44. Okay, now using linear regression and standard deviation, what we're saying is you could go this way, and we'll probably hit that target tomorrow if the rate of change stays exactly the same, okay? Okay, the rate of change in this case is equal to M, and M is equal to the rise over run, okay? Okay, the change sub R is equal to M, which is equal to rise over run. Okay. How do you, oh, all my tools are available. I didn't even tell you. Look, you're going to love it. I run an education service. I know I do a lot, dude. I'm an entrepreneur. What can I say? You can join Investor Bootcamp. Okay, it's $88 a year. Oh my God! And one of the things you get, let me show you. I'll log in. Okay. You get all these training courses. And by the way, they're like epically good in my humble opinion. Like I'll show you, like, here's a favorite one of mine. Oil trading. How many people like trading oil? Well, do you know the geology of gas and oil? Do you know how to predict, like, where it is below your feet?
Is here. Okay. So it'd go la, 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 blue, and then it would collect. Okay. And that's important because it would all rise and it would fill this, and then it moves until it can't move no more, and then it collects. Now there's different versions of this. I've actually seen where some dude goes out to a field and he pushes these little things in by hand, and they tell him, don't step on it. You might break it, or it might go in crooked, and that would give a bad reading. So he has to go put them in by hand and then connect them, okay? And then that gets connected to a thing, and that gets connected to your laptop, and then you set off. Well, in this one, it was amazing. He used a sledgehammer to create vibration.
Today, Piper and I are going to take you and your fellow classmates on a virtual field trip.
So honestly, we had so much fun. Right. So anyway, so if you want to know how to how drilling for oil works,
keep going. because it gets more and more as expensive as we go. Deeper doesn't get cheaper. Okay. All right.
I mean, it's really good. So logging has nothing to do with trees. Anyways, and then we later go into things like fracking and stuff. I take you through all the equipment. Look, a flare valve. Yeah. What about a heater treater? Yeah. I mean, dude, like Investor Bootcamp is insane. It's $88 a year. But anyways, to answer your question, when I go to the dashboard, what about the tools? We have them right here. Okay. Hundreds and hundreds and hundreds of files and templates and EAs and custom indicators and such, all available, included with your membership of $88 a year. Like, I make Investor Bootcamp so insanely accessible that it's really kind of dumb. Like, it's so cheap. It's better than anything you paid $1,000 for. I'm convinced, without a shadow of a doubt, it's better than whatever you paid $1,000 for. I can beat it for 88. Yeah, you gotta pump it. You gotta pump it for oil and gas. Yeah, for sure. All right. Okay, so anyways, let's go back to this. Probably turning risk on. Okay. Moving up from, from the bottom of our standard deviation and linear regression channels. Epic, isn't it? Epic. Yeah, pretty amazing. All right, so moving on up to the east side. So how does this impact everything else? That's risk on, so gold is going to go up, and it is. Okay, based on that, if this continues, so you have to have this narrative now. Okay, if this continues and you are a bull, gold is going to 2020, sometime in the month of August, if you're a bull. Now, you don't know if this bullishness continues, but the logic of the number, and then we can explore this a little further and see what institutions are doing, in this case, bankers. Okay? Okay, but nonetheless, if you believe the NFP number and you believe the stock market's going to continue up for a while because of the bad number, you have to have that thesis. If you don't have the thesis of behavioral finance, the behavioral finance says the bad number is good because the bad number says the Fed doesn't need to jack up interest rates higher and therefore won't have a rate hike in September. Well, I already predicted, 8 months ago that there would not be a rate hike in September, but there will be in November, and you'll be shocked. Yeah, there's going to be a rate hike in November. Oh my God. Yeah, well, you'll be shocked then. Don't worry about it. But there won't be one in September, and people just figured that out today. So if that narrative is what you believe, then our target for gold in August is going to be 2020. Right? Mikhail says, well, yeah, there's a possibility of 50% error. Well, then that'll be new news for a lot of people, right? Yeah. Yeah. Go. Okay, my oh my, WTI should enjoy the aggregate demand from a done Fed and let's say no recession narrative. Okay, current target for oil is $90. $90. Our old trade plan, was buying here with a target of only here, actually. and we had a psychological target here. That's what this red line is. So essentially what we were trying to do is override the technicals and throw in, like a psychological target. So our psychological target was actually a little higher than technicals. And then we were farting around 80.81, 80.81, and we were trying to get a pullback. And I wanted a pullback, to 78 or something. And well, it only came back down to 79 and then already is trying to head up. So I need to wait for a breakout pullback, but there is potential if this narrative continues that we're on our way to 90 from 80. We were at 70 something. Okay, Bitcoin should be up. Nothing's happening. Okay, Bitcoin should be up in this scenario, but is still in a downtrend. So you got to be cautious and careful. Okay. Yeah, Georgie, I am still a bear. What I'm talking about is now. I'm not talking about in general. So what's my thesis for slowdown in gold? So, you see there's our top in gold. So why is this my general thesis? That generally speaking, okay, we are in a disinflationary period. And in this case, you would sell gold. What we're talking about now is aggregate demand off of a no recession play. So when you have no recession, is that inflationary or deflationary? No recession. Is that inflationary or deflationary? Yeah. So if you are a bull on that thesis, this is your technical strategy. Doesn't it, right? Now, I think there's still a chance of a recession, although that narrative is we're not quite there yet. But if we have a series of falling, like if next NFP is 150 and the next one is 120, at first that's going to be good news. Oh my God, the Fed's done. But then we might have a new narrative of like, oh my God, Apple's not profitable. Why? People are losing their jobs. Their wages are not going up. Oh my God, there's signs of consumer spending falling. Oh my God, prices are coming down because inventories are going up and retailers have to slash prices. Now, I think you could get a scenario of both. Okay? I think oil can go to $100 a barrel. Because it was never 65. Let's zip back over to oil. Okay. And then let me bring up the Fed. Is it? Oh, here it is. Okay, let's go to PCE. Oops, PCE. Let's use the Fed's measure of inflation. No, I'm going to need CPI, I think. Let's do CPI, headline CPI. All urban, all items, U.S. city average, median consumer price index, all items, United States. Okay. All right, let's do this. You can see PCE, why the Fed uses PCE, but anyways, let's use it what the media uses. All right. So sort of middle of 2022, inflation started to fall. And we'll use oil daily. March 23, December, hang on. March, April, May. Let's go back to CPI. Where's the top? June 22. Okay, cool. Let's move this to June 22. Cool. So on this day, inflation peaked in the United States of America. What are we studying? Is this the CPI chart? Is this CPI? This is WTI. Thank you, Anthony. Okay, so talk to me, Goose. What happened here? Why did WTI drop from a high? Okay, you have two choices. Okay, this is the quantity and this is the price. Okay, and we'll do equilibrium here. All right, so help me label this chart. This is price 1. This is quantity 1. All right, the downward slope is supply or demand? Well, Mohammed, we're going to ask why, not what it is. Yes, it's disinflationary, but how we got there. Okay, the downward sloping line, is it demand or is it supply? Well, let's think about it. By the way, here's first-year graduate students learning economics. You will be asked this question. Is it demand or is it supply? Well, when prices are high, you demand very little. When prices are low, you demand a lot because this is quantity. This is price. So when prices are high, you demand very little. And when prices are low, you demand a lot more. AKA, downward sloping is demand. So let me put this back to equilibrium. So this is demand. So therefore, this is supply. Okay, great. So how did we get prices lowered? Did we fall into recession? If there's recession and you lost your job and you don't need to drive to work, you don't need as much oil and gas, so demand would fall to D2. And your new equilibrium price is, or your new equilibrium is a lower quantity demanded, so Q1, or right, QE to Q1, quantity is lower, therefore price has fallen from P1 to P2. Is that what happened? We went into recession, Americans lost their job, people stopped driving to work because they didn't have a job, so price fell. Is that what happened last year? 10% of Americans lost their job? No, we just studied non-farm payrolls. Jobs have been steady. Yeah. So what happened? How else can we get the price low? Well, let's increase supply. Okay, so we increase the quantity of oil available from Q1 to Q3. Okay, so quantity moves to the right. We have more. This is supply to. Supply is increased. We shifted to the right. So therefore, the quantity moved from Q1 to Q3, increasing the supply available, and the price fell from P1 to P2. It had the same effect as falling demand, but falling demand was stable. But we shifted this one to the right because we had more oil available and the price fell. Well, how did we get more oil? How did the supply of oil, and we'll just change this to generic oil, okay? How did we get more oil into the economy? Was it the Fed? See, remember, I showed you CPI, and exactly from this moment, CPI fell. From exactly that moment, price fell in the United States. Was it the Fed? Was it rates going up? What happened? J-Man, I don't think that'd be right under the current economic data that we just got. But you do you, my friend. But if you want me to make decisions for you, give me $1 million, pay me 20% of the profits, and the answer is maybe. But I'd like more like 2 million. Okay. So anyways, the United States government pulled from the Strategic Petroleum Reserve and dumped oil on the market. It wasn't new oil drilled. It was oil in storage. Revelations? Send me an email, Wayne at FXBootcamp.com. No, 20% is the performance bonus. Yeah. Anyways, boom, boom, boom. Okay. By the way, my next fund is focused on the stock market. So keep that in mind as well. Yeah. So the government, the White House specifically, tapped the Strategic Petroleum Reserve, which is not new oil drilled. It was oil we were saving for a crisis, like an invasion by a foreign enemy with the intent of killing Americans. We needed that SPR for our tanks and our planes. But in this case, we used that oil, dumped it on the market, increased supply, and dropped the price. Meanwhile, the Fed claims CPI is down because of what they did. But isn't it weird that CPI fell exactly exactly here? With that being factual, and I'll show you the fact again. There's the fact right there. That's exactly the top of the oil market. So, J-Man, Wayne at FXBootcamp.com. Okay, boom. Wowzer. So if the top of inflation isn't the Fed, but instead the White House tricking the market by artificially lowering price through potentially negligent actions, then what happens if the government stops pumping oil onto the market and artificially lowering prices? Could you argue that if that occurs, that it's potential that we go back to where we were? Do you understand that? Look at 99% of the market is only looking at right now. They only know now. Oh my God, that loan non-farm payrolls, this is good, this is bad. But most people are not looking bigger and looking forward. If the Strategic Petroleum Reserve, dumping of the Strategic Petroleum Reserve is over, is it even possible that oil prices go back up? And if that happens, is it possible, likely, that CPI goes back up, regardless of the Fed being paused at 5.25%, 5.5%? The Fed thinks they're done because inflation is down. So we pause and the market rallies. And then what? What if food prices go back up, energy prices go back up, gold prices go back up, cobalt, lithium, steel, which needs iron ore and coal? What are you going to do if all of that happens? Define cuts. What cuts? Richard, I'm not sure what cuts. But anyways, do you have that in your wheelhouse? Are you thinking about that in the future? And that's where I think people have a disconnect, because I think most of the market is look, we averted a recession. Inflation is down. People never lost a job, even though their bank accounts have gone to zero and their credit card debt is up. And we have an inverted yield curve, and the stock market is priced at 45 times earnings, and there's a very narrow breadth, and the yield on the 10-year T-note is crazy high, and oh God, really? Is everything really that good? Are we really on the free and clear? Crisis averted, everybody? Let's go. Really, there's no chance of... Well, what about the potential narrative? I'm not saying it's the only narrative. But what the hell happens next year if oil prices go back to 100? Because they're like, well, why did it drop from 120 to 60? Why did oil prices drop by 50%? Because the government dumped oil on the market. Well, now they can't do it anymore. The oil's gone. Now what? Prices go back up, and there's nothing the Fed can do about it. There's nothing the White House can do about it because now it's gone. They burned through it. It's just gone. Now we don't have a strategic petroleum reserve. If China decides they want to attack, we won't have fuel for our tanks. Do you know what happened in the Battle of the Bulge at the end of World War II? The Germans lost because their tanks run out of fuel. That's it. No joke. Okay? Stalingrad was about oil in Baku. And the Germans lost that. The Russians paid a heck of a price, but Germany lost that. They didn't get to Baku. Well, what about the great tank battles in North Africa? Why was the first battles of World War II in North Africa, not Europe? Because the Germans were there for oil. So the end of the war had to do with Germany ran out of oil. That's right, Rommel, Desert Fox. Yeah, well, but he got shot in Normandy. Anyways, so I'm just saying, like, now that our SPR is gone, well, there's still 50% of it there, but it's so low that you can't actually suck much more out, otherwise the caves collapse. So anyways, so like now we're vulnerable. We have one of the largest armies in the world, but we don't have fuel. It's like we have more guns than everybody, but no bullets. Well, good for you. Nice rifle. A sniper without a bullet. Nice. Good job. So anyways, so if we can't just add more, then don't we have a reasonable risk of maybe inflation returning? And the Fed could only then raise interest rates more and more and more and more and more because they're convinced what they did worked. I don't think it had anything to do with the Fed. I think the interest rates now are just normal. Now the Fed looks at it and they're like, we raised interest rates, inflation fell. What we did worked. Remember, they're economists. So they changed interest rates and they're like, it worked. Look. And they have facts, but it's correlation, not causation. You understand? So what would the Fed do if suddenly inflation came back? Raise interest rates more. Inflation's still there. Raise it more. They're like, man, last time we raised interest rates, inflation fell by 50%. Well, just keep raising interest rates. Do it more. Do it harder. Do it faster. Let's go to 10%. It worked for Volcker. Oh my God. Oh my God. That is not the right thing to do. But that's how they're going to think. And that will create a recession. Just not this year. The way to fix inflation is to raise taxes and pay down the debt by $5 trillion and continue quantitative tightening. We already have a strategy in place. It'll take 10 years. It's not a problem. Let it all run off. It's good. So the Fed's doing a good job there. The federal government needs to raise taxes as an emergency and pay back the money that they borrowed for COVID. Pay back the $5 trillion in debt, right? And decrease the government's exposure to this debt. Pay the lenders back. This will remove $5 trillion from the economy, and the inflation will fall in a controlled manner. I wanted to get here. which one do I need? No, sponsored. Really? All these? Department of Commerce, U.S. Dollar, Economic Development, EDA. I don't think that's the right one. How about U.S. debt service level cost? That's not that. So do I want this one? U.S. Department of Treasury. That's the wrong one. No. Let's see this GDP, federal public debt as a percentage. No. All right. Well, we're now spending $1 trillion. So this is going to be a ratio. So this number's already old. We're almost at $1 trillion right now. It'll take me a while to show it. I guess I can't. I won't do it quickly. So anyways, the cost of servicing U.S. government debt jumped by 25%. Okay. How many, think of it this way. You have a mortgage, right? It's usually your biggest debt. What if your monthly mortgage payment went up by 25% this year? That's what's happened to the U.S. government. And I believe it's actually higher than this now. I believe we are now almost at $1 trillion. So let's say this jumped by 40%. We need to pay the debt down, guys. You want inflation to go away? Get rid of that fake money the government added during COVID. I did a Q3 outlook, and I showed what happened to the money spent on COVID and what happened to people that never got a COVID check. The people that got a COVID check are worse off than before 2019. Before COVID, the people that got a check or checks are worse off, and those that never got a check are better off. Do I look at gold to oil ratio? No, I don't. It'd be interesting, though. How many people here attended my Q3 Outlook, where I, for about, 2 hours, I went through about 40 different graphs, pulling apart the U.S. and foreign economies into pieces so that we can compare and contrast? So that we could compare the UK to Canada and to Switzerland and to Europe and to Japan and the United States and all that kind of stuff. So we've already done all this stuff. But what I'm trying to tell you is the major problem right now is the COVID money. Not what the Fed is doing, but the problem is the government is doing nothing except tapping the SPR, which is just as dumb as what happened during COVID. Now, you might say, Wayne, well, I'm a Democrat and you're clearly a Republican and I don't appreciate the whoa. I'm just a Canadian boy from Saskatchewan. I don't even get to vote. I'm not a Republican. I'm not a Democrat. I'm an economist. I'm a capitalist. I'm an entrepreneur. And I'm a supermodel. So I'm telling you from an economics point of view, it was dumb then, and I can prove to you that it had negative consequences to every American, but in particular to the Americans it was directed to. People are worse off. So when when Elizabeth Warren said to Jay Powell, "So you intend to put 2 million Americans out of work?" He said, "No, I'm going to protect 350 million Americans from inflation." Okay? So anyways, going back to this, there is negative consequences to what happened. We're still negatively impacted by COVID. The thing that's killing us is the $5 trillion that the White House and Congress spent. $5 trillion. Even though the Fed was doing $5 trillion, the federal government decided they also need to do something big, and they did their $5 trillion. So now the Fed is taking that $5 trillion back. Their $5 trillion, they're slowly removing it. That's what the Fed should do. That's the best thing. The Fed should pause very soon and stay paused for the next 10 years. What the government needs to do is raise taxes, pay down the debt. That's it. And or cut spending and take that money and pay down the debt. You have to pay down the debt. You have to remove the fake money that was added to the economy to remove inflation. So if they don't do that, guess what? WTI is going to go up. The Fed's going to jack up interest rates, and they're going to destroy another $5 trillion, not by removing, allowing runoff from their balance sheet, but by inadvertently causing a huge economic crisis and just destroying $5 trillion out of the economy, but not through a controlled burn, but through an out-of-control forest fire. Will they destroy 3 trillion or 10 trillion? Well, we don't know. Nobody's in control of it. It's just on fire. Well, that's not the right way to handle it. I'd rather just raise taxes and set a special purpose vehicle where the tax money will pay down the COVID money debt over the next 5 to 10 years. Okay. Mikhail says, why do we have inflation in Europe? Similar problem, overspending on COVID, but also socialism. Now, I know you're capitalist and I know you're democratic. But in the pendulum of pure capitalism to pure socialism, you're closer to the middle, let's say, than some other economies. The United States is more capitalist, but still capitalist and democratic. Hong Kong is much more capitalist than the United States. The United States is much more capitalist than Canada, and Canada is more capitalist than Spain and Greece, you see? And there isn't sort of one is better than the other, but there are there are consequences to these social decisions. So, for example, in 2008, when the German economy collapsed, what did the German government decide to do? Cut spending, raise taxes, and drive their economy into the ground. Huh? How does that work? I tried to talk to Angela Merkel. My first degree from Harvard had Angela Merkel speak as my commencement speaker. So she was right there in Harvard Yard. Yep. And in fact, I brought my mother and my daughter to be in the audience with me while Angela Merkel spoke. I thought it was important to have my daughter there because I said, Angela Merkel is one of the most the most powerful woman probably on earth, but certainly Europe running the largest economy and the de facto head of all of Europe. She's got nuclear bombs, right? Yeah, amazing. But I wanted to ask her, like, how does that make sense? When people have lost their jobs, why would you tax them more and cut spending? Didn't you learn economics? Didn't you study Keynesianism? The United States did the opposite. They increased spending like crazy, quantitative easing, for example, and got out of the problem much quicker. But here's what I'm trying to get at. There are different responses. What we're trying to do is, how do we handle scarcity? So there's a difference between the United States, Hong Kong, Australia, New Zealand, Canada, Germany, France, Spain, the UK, Greece. Every single country made a decision in regards to COVID or regards to the great financial crisis of 2008. And they make it, it's a social decision. How do you handle the scarcity of resources? So answering the question, why does Europe have higher levels of inflation? Well, you look at Spain, normally, and FXstreet is based in Spain, the Spanish decision-making process is, okay, they are democratic, they are capitalist, but based on their management of scarcity of resources, they have higher levels of safety. They invest in the social infrastructure, but because of that, they have persistent inflation and persistent unemployment. It's normal. It's just normal. It's a consequence of their decisions. Okay? Like every time I start a webinar, I say, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Why do I say that? Well, I'm required, based on U.S. government and therefore their decisions on how to manage society, that I have to tell you every day that when you risk money in the stock market or in the Forex market, you might actually lose. And then if you're dumb with your money and you make dumb decisions, you're going to lose a lot of money, maybe all the money you put in. That results are not guaranteed. And what worked yesterday won't necessarily work today, because today is different from yesterday. The economy is different this year than last year, than 20 years ago. I have to tell you every day, treat you like a child, apparently. But it's not my decision. It's society's decision. You should be forewarned. Now, I do like the idea that there should be transparency and all that, and regulation is good, and that clients need to be protected. And there are degrees of what needs to be done to protect the client, in particular from fraud. Perfect. But it could be too much, and it could be stifling, so government regulation could put all Forex brokers in the United States out of business except for 2 or 3, and we have almost no competition. Well, I'd say, well, that might be too much. Not for me to say, it's for society to say. If you invest in the stock market in Hong Kong and you lose money, the government says, well, that's your damn fault. You should have done more research. You should have made a better decision. You took the risk and you lost money. Well, that's your problem. What does that have to do with the Hong Kong government? But at the same time, get this. If you risk your money in the stock market and you make money in the stock market in Hong Kong, guess what? You're not taxed. Oh, why aren't you taxed? Well, you already paid taxes on your job, and then you decided to take your excess capital, instead of spending it on a TV, you decided to make a wise investment, and it worked out, and you made money. Keep it, bro. You earned it. Good for you. What does that have to do with the government? It's your money. Oh, you bought an apartment building and 5 years later you sold it for a profit? You don't get taxed. That was a wise investment of your excess resources. Good job. Keep it in the economy. Keep it rolling. Maybe go out and buy yourself a Rolex like Hong Kong. Love Hong Kong. Okay? Canada. We're going to tax you at birth. We're going to tax you at death. We're going to tax you federally. We're going to tax you locally. We're going to tax you provincially. But only 50 or 60%. But guess what? If you get sick, you go to the hospital and there's no bill. Well, that's nice. Okay? Different social decisions. Okay? Different social decisions lead to different outcomes. None of them are right or wrong. There's just decisions. So the United States will always have a lower unemployment rate than Europe. Always. There's nothing that Europe can do except be less European. And you wouldn't ask a European to be less European. Oh, Europe, you should be more like America. No, America ain't perfect. There's a lot of problems. I'd say it's a little too socialist. But less socialist than Spain and less socialist than Greece. Okay? Right? So but you say, well, there's lots of inequality in the United States. Yeah. Did you know there's only one place on earth that I recall equality? And that's Cuba. Everybody is the same in Cuba. It doesn't seem like race is a big deal in Cuba. It's a big deal in the United States. Everyone likes to pretend it's not. Inequality is a problem. Yeah. But everybody is equally poor in Cuba. And I'm like, probably not the best solution. So now you got to swing it back. If you go to pure capitalism, what'll happen? Eventually, we'll all work for one company. We all live in an Amazon warehouse. You're like, whoa, swing it back somewhere in the middle. I like Cuba. Well, let me put it this way. I like Cubans. Some of the nicest people I've ever met are Cubans. Okay? I was at a racetrack on 4th of July with my son. And we're watching the best drivers out on the track. We're like, that car there, just killing it, right? Killing it. So I said, look, let's go talk to the drivers. And he's like, what do you mean? I'm like, let's go talk to them. Talk to them? What are you talking about? Yeah, let's go talk to them. Let's just walk into the paddock. You're not supposed to go in the paddock. Yeah, let's go to the paddock. So anyway, so I'm going to the paddock. Cars are coming in, parking, right? And the doors open, helmets come off. And I'm like, whoa, man, look at you. What is it, the car or the driver? The guy turns around and he's like, oh, man, right? And so I'm like asking questions about the car and the experience the driver has and all that kind of stuff. Turns out this guy's Cuban, right? I'm like, my son has the same kind of car, a little bit less horsepower, though. How much horsepower is this thing? 800 horsepower. I'm like, whoa, man. And that puts you at an upper level and your skills are great. How long have you been doing this and all this? And he's like my age and we're just standing there for 20 minutes talking to this guy in his stall in the paddock. And I'm like, hey, do you do ride-alongs? He's like, no. But let me go borrow a helmet from another driver. And he walks over, gets permission to borrow a helmet, comes over, gives a helmet to my son. He's like, let's go for a few laps. Let me give you an example of this. Every 4 laps, you have to put new tires on the car. It's expensive. But anyways, my son comes back after a couple of laps and he's just smiling ear to ear. And the Cuban guy, he's smiling ear to ear. And I'm like, oh, we're talking about it. Like, oh, it was amazing. Right? I'm like, so like, I'd like to, how do I thank you? Like, you spent a lot, there's, like, can I, and he's like, no. He's like, the experience that, was enough. I'm glad your son enjoyed it. And he would not accept money. He would not accept money. He was too gracious. And it was just super cool, right? And like, I run into Cubans like that all the time. So yeah, I'm not there in Cuba to analyze and say, I think the social infrastructure system is correct or incorrect. I think the economy is good or bad. I'm not there for that. That's not what I'm there for. I am there to help the good people of Cuba. I'll spend some money. I'll spend a lot of money in local terms. And Cubans aren't, right? That'll be great. I'm going to bring a few gifts for the people I met back in January. Cool. But I want to just observe. I want to know what it's like. I want to see what it's like. I want to see how people handle, like anything else, the scarcity of resources and the consequences, good and bad, of the social decision process. Now, you might say, well, the average Cuban didn't make that decision. Well, I didn't make the decisions of the NFA either in the United States. And I look at a lot of their decisions. I'm like, I don't get it. First in, first out? What the hell? That's stupid. But it's not my job. It's the social decision. First in, first out, banned in the United States, or let's say carry trading has been banned in the United States because they always take your oldest trade out when you take profit, which means you can never carry trade. But why would you want your society not have long-term investments? Why would you only let people have short-term investments? I don't understand it, but it's not my job to understand. It's my job to obey. Same thing, like I'm not in Cuba to like tell Cubans they're all wrong and all bad and they're doing it incorrectly. I'd be a fool to do that. They're just as right as wrong as Greece and Germany and France. I don't get what they do there. Huh? I don't understand Brexit in the UK. Like, I don't understand that. But it's not my job to understand that. I'm not British. You know? You know what I mean? Maida, I know. But it's not my role, though, Maida. And if I had decided to be that person, you know what would happen to me, right? But I'm not there to comment on the UK either. My job is to understand what's going on and the consequences of those actions and make money to feed my family and my children. Well, okay, but Maida, I have to put that. I have to attest to that, Maida. So legally speaking, that is why I'm going. Yeah. But Maida, I have a good heart. I hope you believe I have a good heart. I do understand your argument. I really do. Yeah. Well, I'm still eating. Yeah, well, I mean, ultimately, yeah. I mean, yeah. That's not my... Yeah, I know. I'm not trying to do harm, though, Maida. I hope you believe that. I can go there and I can write books. I can go on podcasts. I can do live streams. And I can tell people what I saw. And in a weird way, and you probably won't like this either, but in a weird way, it's another voice kind of getting off the island and sharing reality. Maybe I'll get a blurred reality and a filtered reality, but it's better than nothing at all, I hope. But at the end of the day, I hope you believe I have good intentions. But like the government, there's negative consequences to good intentions, and I understand that as well. Yeah, and I actually talked to people about that, Maida, and I'd have to be very careful. But I did actually had a meeting about that. Like I said, I met with the former head of foreign exchange for the entire country. And so I asked him questions about what I could and couldn't do. One of them is I couldn't charge money. But that would be a scenario where I'd be worried that I get an extended free vacation for a couple of years, all expenses paid by the Cuban government, in a tiny little cell in the jungle somewhere. And my wife and kids don't hear from me for a while. I don't want one of those. So anyways, look, I've gone too long. I have to go to FX Street Premium. I got to hang out with my buddy Ross. I think it's now. So we did some fundamental analysis, some technical analysis. I had S&P 500 going up from the bottom. It's been going up. We just hit, right, the first level of standard deviation. It's hesitating here, and ultimately there's some more up there. Okay. So I think I'm over there. Maybe I'm getting emails like crazy. Where the hell are you, Wayne? I'm like, well, I'm babbling with my buddies, my friends, my FX Street buddies. So anyways, let me say goodbye one more way. I want to ask you, please try my new service. It's free. And you will be amazed and shocked, I believe. Trade plans. I'm going to run it one more time and then I'll say goodbye. But thank you to FX Street and thank you to our moderator and thank you for your, more than a couple of hours of time. I appreciate you. I don't give you rah-rah speeches about getting rich quick. I hit you hard and fast with reality, and I hope you appreciate that. But here's a service I really honestly believe will help you. It's free. I'm spending a lot of money. A lot. So I've already spent it. Would you just use it? And let me run it one more time and then I'll bid you adieu. Hey, welcome to Tradeplans.ai, where you can get feedback on your trading idea in less than 3 seconds. You fill out the form, you hit submit, and our trade plans will already be in your email account. In fact, when you open it up, you will see that there's a trade plan for daily, for weekly, and monthly. And again, we can do this in less than 3 seconds. Now, how is that even possible? Well, of course, I'm utilizing artificial intelligence. So my name is Wayne McDonell. I've been trading for over 20 years, and I've been teaching artificial intelligence on how to trade. So when you submit a trade plan, we have thousands of candlestick data points in which we can analyze using dozens of algorithms and help you put together trade plans. You can take what you thought with what the artificial intelligence is thinking, and you can compare and contrast. But here's the cool thing. We also track the trade over time so that the machine is learning from your wins and your successes or in your failures or its wins and its failures. And the more trade plans you upload and the more trade plans others upload, the better the feedback gets. So give it a try. Fill out the form, post a trade plan, and check your email. There's already 3 different types of trade plans for you to compare and contrast with your own. Try it out. It's awesome. Okay, it really is awesome. I'm telling you, it's so ridiculously fast, you will just be stunned. Then you'll open up your email and it's better than you imagine. I'm telling you. I don't know what. So I've named the AI. I've named him Aiden. So Aiden has a name. Aiden will write an email to you and give you 3 trade plans based on what your trade plan was. He might agree with you, he might disagree with you, but I don't know. There isn't like an algorithm that just like spits out a template. I don't know what he's going to say to you. I don't know what he's going to write to you. There isn't like a template where you just like, if this, then say that. And then insert this one. Hello, my name is Wayne McDonell. And today I would like you to buy euro, dollar. No, it's nothing like that. It's total artificial intelligence. It'll write you a coherent email in which no 2 emails are the same. In a sense, Aiden is actually talking to you based on what your thoughts were for euro dollar. It's insane. So I don't know what he's going to tell you. You should check it out. And he learns from your successes and failures and his successes and failures. It's crazy next level stuff. Total neural network machine learning. And I already built him. He's alive. He lives at Amazon Web Services in their artificial intelligence area. And they have machine learning tools and all that kind of stuff. And it's cost me close to $100 a day just for him to think. And then cost me probably $30 or $40 a day to send you the email. Just those 2 things. Forget about the development work and all that. Just those 2 things. And I'm paying for it all myself. I want you to use it. Right? Check it out. Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. And I will be popping into the premium room at FX Street. So I'll see you in the Discord channel. Have a wonderful day. Thank you for your time. I appreciate you. Cheers. Oh, and thank you, moderator. McPip says gold available. We're getting access to the data points for gold and oil. It's a whole different area. It's a whole different service. We have to be able to access their API, pull out the 15-minute, the 4-hour, the daily, be able to reformat it to fit it into our structure, and then pop that into the AI. So we're in the process. It'll probably cost me just a few $1,000s in development work, and probably, and then I have to pay for the ongoing pulling the data all day, pulling in data, and doing all the calculations and crunches. So yeah, it'll only cost me several $1,000s, many thousands of dollars, but I will do it for you. Yeah, John wants to know how to post an image. Okay, let's try this, John. Windows, snipping tool. Boom, here's my snipping tool. Great, boom, grab an image. Great. Okay, so that brings that up. What's your trade plan? Well, let's do this one. I want to buy a dip and then take it north. Done. Save it. Cool. Screenshots. Boom. Save. Done. Cool. Where's Tradeplans.ai? Here it is. It's now mobile responsive. Yeah, great. So put in the file. Here's the one I just created. Boom. Done. Okay. Yeah. Cool. So anyways, got to roll, babe. That was real. Got to jump. Thank you again. Thank you, moderator. Thank you, FX Street.